Hi, good evening, guys. I'm Candice.
I'm Francis. Now we are going to introduce the accounting methods and policies we use in this case. Firstly, we consider the amount of sales, and we use accrual method, in which we use value of goods invoiced during the year as the amount of sales. In this method, we account for expenses when they are incurred. So if you receive an invoice before you receive the goods listed on that invoice, you must count the expense on the invoice date. The delivery of the goods is irrelevant to the accounting for the expense. Here is the reasons why we use other values to be the amount of sales. The sales in inquiries is irrelevant to the sales actually happen, and the values of orders. Those orders may not be completed within this year. Some of them may be continued next year, so it's also not the accurate amount of sales. As for the values of goods delivered, sometimes maybe the goods is not enough, and some of them cannot be delivered. As for the cash received from customers during the year, um, it's here the figures. The amount owed by customers at the end of 2010 is lower than at the beginning. So some of the amounts owed by customers must be paid within this year. So the cash received from customers is not all the sales. So finally we decided to use values of goods invoiced. Here is the income statement. The sales we use is 4,800.
Okay, then we need to consider the cost of goods. Based on the information given in the case, we can find that at the beginning of 2010, we get the inventory of 280, and in this year, the goods received is 2,800, so this figure is here. And when we add them and then minus the cost of goods sold this year, we can get the inventory in the end of the 2010, which is 360 here. So after calculation, we can got the cost of goods sold this year, which is 2,720. So then we can got the gross profit here. And here we have another. We found another thing is the net realizable value at the end of 2010 for this inventory is 400, but the cost of goods at the time is only 316, which means there is an increase value of stocks happened at that time. So we add this amount to the operating expenses here, which is positive for 40,000 pounds.
As for the general expenses, here there is a figure 1,600, which is paid during the year and is in cash. Those included some of the amount that is not included not actually happened in 2010. Those figures should be excluded from the income statement. For example, this amount owing at 2009, and we assume here that they are all paid in 2010, but this not really happened in the profit, so it should be included and excluded. As for the amount prepaid at 2010. It's actually it's for the next year. It should also be reduced from this amount. These two is really happened in 2010, but they haven't been paid, so it shouldn't be shown in cash flow statement, but it should be shown in the income statement. As for the advertising expenditure, since it will benefit on sales over a 2 years period, so it should be divided by 2, which is 100.
So here are the figures. And then we turn to fixed assets, where we should consider the depreciation and write-down fees. Firstly, for the buildings, because in this case, it said that the buildings are likely to have a life in excess of 50 years, and the maintenance costs will increase as the buildings become older. So we think that as the buildings become older, the depreciation phase for the buildings should increase. But this case only consider the first 5 years. So we assume in the first 5 years, the buildings can use very simply the straight line method. And we got the result of minus 350 here. And for the furnitures, because this case doesn't mention any more details for the furniture, so we think that it simply use the straight line method. And we also, after calculation, got the figures for minus 15.9 here. Finally, for the vehicles, this case mentioned the vehicles in the first few months we used more than the afterwards, so we should use the reducing balance method here, which means in the first year we should double the depreciation rate, and afterwards we should use only the depreciation rate. So we got the minus 220.3 here. And at last, we saw there was bad and doubtful debts. So here we think we should consider the increase in provision for bad debts for 5% of the amounts owed to it by customers. And since the figures has fluctuated between 2.2% and 10%, and the 5% is like an average amount, so we prefer use 5% as this. So we can say here there is an increase in provision for bad debts here for minus 32. And after some calculation, finally we got the operating profit for this figure. And these are our method and policies we recommend for this company. And thank you guys. Bye.
Bye.